Back to another video. So this is like a one shot to the fractals. I'm going to explain like almost every single thing inside of the fractals, not in proper detail, but like I'm going to be explaining them in a proper way that you actually have a proper idea that how you're supposed to use it. Okay, like this is the fractal chart. What you see right here is three important things. Okay, first one is the pivot, then is the vector, and then is your probable band. First of all, the pivot. So pivot is like a neutral line. Okay, pivot indicates neither bullish nor bearish. Above the pivot is actually bullish, below the pivot is actually bearish. As simple as that. Then we have the vector. The vector is the purple line. If the market is below the vector acts as a resistance. Like right here, you can see the rejection from the vector, right? And then above the pivot too, you can actually see the support from the vector. When the price is above the vector, it acts as a support. As simple as that. Then you have the probable bands. So probable bands are actually, the probability of actually reaching that particular level. Like right here we have the 20% band at around 471.77, so that indicates that there is only 20% chance to actually reach that price in that particular cycle. What do I mean by cycle? Basically, when the market transitions, it marks as a new cycle. Like right here, the market transitioned below the pivot, right? The market transition here at the beginning of the new session, which is marked by yellow. It transitioned below the pivot, leading to a new session also. And then we can see right here that it led to a new cycle that also led to the closure of the open states. Now, what is open states? Okay, now open states are basically targets, as simple as that. Open states can be used as a target. If the open state is below the pivot, it is a bearish target. If the open state is above the pivot, it is a bullish target. Okay, you can also use the probable bands as your targets. Now, inside those probable bands, you see those black imprints. What do they actually mean? So basically, all these black imprints you see right here are the previous support and resistances. Okay, like right here you see this L26 right here. Okay, I'm going to explain what is L26 actually, but you see this low right here, and if you follow that low to the right hand side, you can actually see the black, okay, this black line right here. That is a support. Like in your normal charts, you mark out like support and resistances on your linear chart. This is the similar thing to that, but here there's a lot of maths and calculation used to actually give you that particular level. Okay, then the question comes that how this L26 that you just saw right here actually formed. Okay, I want you to just like take a look at one important thing right here. Okay, you see all these candles, these are like normal candles, but when the market transitions, it actually marks a new low. Like right here, the market transition here, it led to the formation of L1. Now let's say the market actually formed a new low below that L1, so that led to the formation of L2. Now right here you can, if you count the number of aggregation right here, it's going to be 26. That is why this is L26. Like right here we saw the cycle above the pivot, and then we saw H1. Okay, H means high, high one, and then we saw another high leading to the formation of H2. That's all. Okay, let's just use another example for more clarity about the fractals. Okay, again, the pivot is the neutral line. Above the pivot is actually bullish. Below the pivot is actually bearish. Okay, then we have the probable band. Like right here, this is the 80% probable band, which means there is a 80% chance that the market actually reaches this probable band whenever the market gives a transition. Okay, same as for the 50% band. There's 50% band to actually reach there's actually 50% chance to actually reach this band right here when the market transitions below the pivot. Okay, same as for above. For example, let's say the market transitions above the pivot here, so there's 80% chance that the market actually reaches this price point. Okay, as simple as that. Then also we have the open states. For the past 2 days we have been seeing that all these stacked open states are being, taken out. Like right here, the market took out three targets, and then yesterday, because of such a great bearish move, we actually took out the open state in the 10% band, indicating that there was only 10% band 10% chances, sorry, to actually reach that probable band. Okay, I know that you must be wondering, there's only 10% chance to actually reach that particular level, then why did the market reach it? Sometimes the market may try to go against the odds. This doesn't mean that it does not work. Like, we cannot a person's brain to actually understand what they're trying to do. Okay, we can only like find out different levels and odds give us the best edge in the markets. Okay, then the next thing we need to talk about is again the vector. Below the vector is actually resistance, above the vector is actually support. Like right here, if I zoom in into this chart, you can see the market is taking support. Like, look at my cursor. The market is actually taking support from the vector and then transitioning above the pivot, leading to the formation of a new cycle, right? That's all. So like, that is how simple it is. Okay, now you must be wondering that, okay, so how is the value of the pivot and the vector decided? We cannot know that how the value of the vector is decided, but we can know that how the value of the pivot is decided. Okay, I'm just gonna rewind the price action a bit to actually give you the idea that how it's actually formed. Right here. Okay, perfect. Like right here, you see the vector value, it's 492.49. Just as I move uh, one more tick, you can see right here, we saw transition. Now look at the pivot value, it's 492.49. So the last vector value above or below the pivot before the transition actually is the value of the pivot whenever there is a transition. Okay, like right here, you just saw it, right? If I go back again, 492.49, that was the last value of the vector. Now, just as we're gonna see the transition, the value of the pivot is gonna change to 492.49. Done. So you can just see right here, the pivot's value actually changed. Now this is the same for every single chart. Okay, these are the basics of the fractals that you need to understand: the open states, the probable bands, your black imprints, then your transition above or below the pivot, the vector. Okay, these are basic things that you develop a understanding for. You can like find it easy to actually just move on inside of the fractals. Then we have the wave number. For the wave number, there's a simple rule: the higher the wave number you use, the lower the number of transitions there are. Okay, the lower the number of the lower the wave number you use, the higher the number of transitions there are. Okay, like let's say we are at wave 7, 60-minute aggregation. So basically this is an hourly time frame. Okay, and there's 50 days to load. Basically this is the data of 50 days, and I can actually increase the number of days. For example, this is 100 days of data. Okay, now that is your choice to that you want to use like 50 days of data or 100 days of data. I use the 100 days whenever the market is like around the 20% band, because like that's considered outliner. you know and then you need more support and resistance levels depending wherever the market positioning is. Okay. Okay, again, coming back to the wave number, let's say that we are using the wave 7 as like a neutral point. Now, if I increase the wave number, let's say I'm gonna increase it to wave 50, you can just see the number of things actually reduced. Okay, I'm gonna go back to 7. You see many transitions above and below the pivot. Okay, market is moving like a zigzag right here. But if I move to the wave 50, you can just see the number of transactions actually just decreased. But if I move to the wave 1, let's say, okay, just look right here, the number of transitions just increased drastically. Okay, the lower the wave number, the higher the number of transitions. Simple. Now again, if I come back to wave 7, we can see right here. Okay, now this is very neutral amount of data. This is like very basic to understand, I guess. And like wave 7, 60 minute, wave 10, 15 minute, wave 7 daily. These are like the basic charts that people use inside of the Russell Capital Group, to actually show their, like these are the basic charts that you, if you use, you're gonna be able to, like make your decision inside of the markets. And personally, I use these time frames like right here. You can, if you want, you can just copy them, and yeah, basically these help me a lot. And then the next thing I'm going to be talking about is the options analyzer. Okay, for the options analyzer, I'm going to be needing a more simpler chart. Like right here, I'm going to, let's say I'm going to use wave 10 15 minute aggregation basically. Okay, wave 10 I'm using. Okay, now if I reduce the wave number, so what happens when we reduce the wave number? The number of transitions increase. Okay, but I'm going to stick to 10 right here for explaining. Okay, if I go to the options analyzer, and then I look at the highs and the lows probability, there's one important thing you need to see. Okay, for example, the market is currently at L26, below the pivot. So below the pivot odds, you're gonna see right here marked in red. You can see the odds of L26 forming is just 17%. Now what does it actually show you? It shows you that the probability of forming L27 is actually less than 17%. So basically, what can you actually expect for like tomorrow, or for the coming next session, or coming next candle? Like you can actually just make out that the probability seeing H1 is actually more than 83%. You can, just subtract 100 minus 17, and just get the odds for the H1 or even L1 if the market is above the pivot. Like right here, let's just suppose that the market is at H8, and there's only 36% probability of it forming, and you're wondering, okay, what's the probability of H9? It's going to be less than 36%, of course. Okay, and you can actually see it actually decreases, so of course it's going to be less than 36%. Okay, so this is how you can actually use the options analyzer. There's one more thing right here, that is your histogram. Now if I click on sort histogram, you can see it just, like, um orders all of these highs and lows according to the magnitude of the move that they're actually showing. Like right here, L26 actually gave out like a outliner type of magnitude. Like it's the lowest, right? It's in the 2% band region. Like it shows that there's only 2% band to actually achieve that price, showing that this is outlier. Okay, and right here you can actually see that it is also indicating the same thing. Now if you actually see above the pivot too, like this is the pivot, so same as the pivot right here on our chart. And where is the H12? It needs to be the highest cycle number that we're going to see above the pivot. Okay, like right here. Perfect. So H12 is actually the highest in the 5% band region, showing that this is a outlier move. Perfect. Okay. Now there's just one more thing about the chart. That is your that is your Now for the data, we already have a video for it that is made by Begin. You can actually just check it out, and it is perfectly explained by him that how you can actually use the ceiling, floor, and the PML to actually give you a daily range that the market will move in. Okay. Now I'm going to move on to the next thing, that is the graph settings. Now, inside of the graph settings, we have way too many features, but I'm just going to be explaining the simple ones and the ones that you're going to be needing when you're starting using the fractals. Okay, so here we have the options data. Now, do not compare this to the JEX and all that stuff. Okay, now this is like absolutely different than that stuff. Okay, so do not try to compare it like that. Okay, so right here, you see all of these peaks that are forming. Like these are balls that the price that these are actually showing that, okay, if the market reaches the ball price, for example, we have a ball at P479, showing that the market makers are not gonna lie to actually let P479 get into the money. Okay, so they're gonna be avoiding that the market that the price actually gets below that P479 level. Okay, so that acts as a support. Same is for these green imprints and these green peaks. Like right here, we have a peak at C490. I'm sorry. So that indicates that this is a resistance. Market makers are not gonna like to actually let that contract in the money. This is a POI, but it actually is a resistance too. Okay, remember that. All of these balls that you see right here, all of these peaks are actually POI, but also resistances and supports too. As simple as that. Now, moving on to the next feature, that is the wave analysis basically. Now, here, if I click on the projection of waves, you're going to see way too many waves right here. So, what do they actually mean? Okay, let's move on back to the wave 1015. All these waves that you see right here marked in pink are actually showing you probable paths that the market can actually follow. Like the market can actually follow this path right here and reverse from this curvature or reverse from this curvature. And then the next thing you are seeing right here is this blue line or blue wave. Now what is that? So basically this is the mean wave. Now I hope that it's understood that what's it like trying to show by the word mean. It's the average of all these waves right here. You guys have seen that I've already, like I already keep it on my chart because it acts like such a great tool to actually tell you the fear inside of the market. Because like whenever the mean wave is like near the 20% band, 10% band, it indicates downside fear. Okay, mostly whenever it is below the 50% band or like away from it, that indicates that okay, so market makers are actually interested in the downside, so we can actually aim for it. Okay, as simple as that. And then the next thing we're going to be talking about is your color scheme. Okay, like we have three color scheme. This is the dark one, this is the bright one. Okay, no one really uses the bright one because like it's gonna hurt your eyes a bit. And then we have the night one. Night one is pretty cool too, but like I want to keep it at the dark one to actually just explain it to you, because like it's the most easiest for me. And then the next thing we're going to be talking about, all of these are actually just explained in the 5-part video. I'm 5 part playlist I actually made on the graph settings. You can just check it out. Also, share the link inside of the description. And like I have already explained all of these important tools in proper detail. Okay. Then the next thing we can talk about is this thing right here. That is your standard deviation. Okay. Before we start with the standard deviation, I want you to take a look at the macro trend. You see the macro trend, it is red, somewhere it's green, and like it just keeps on fluctuating between green and red. What does that actually mean? Whenever it's red, it means bearish bias. Simple. That's all. Whenever it's green, it shows bullish bias. Simple. That's all it's trying to show. And whenever, now coming to the standard deviation, whenever you see that the market is actually in the standard deviation squeeze, it means that the market is actually preparing for a some sort of explosive move, basically a volatile move, indicating that there's going to be a higher volatility inside of the market. Very recent example right here. You see that the market is actually in the squeeze right here, right? And then you can see because of that particular squeeze, we actually saw a change in the macro trend, leading to the bearish macro trend and such a great move, leading to the closure of two open states. What are open states? These are targets. Remember? I hope so. You remember that because, like, we talked about it 10 minutes ago. And then again, we're going to be coming back to the graph setting. I want to explain just one thing about it, and then we're going to move to the spread monster, which is one of the most famous tools inside of the fractals. Okay, here we have the show cycle analysis. Now cycle analysis is very much related to the wave analysis that we have, and these two are pretty much correlated. Now I'm gonna explain that how they're actually correlated inside of the fractals. Okay, what do you see right here is peak to peak move above the pivot, right? Like right here, it's a peak to peak move from H2 to this H2. So this peak to peak move is actually marked right here. Okay, what does this cycle analysis do? It counts the number of aggregation from peak to peak. That's all. I hope that it's understood that what I actually mean. Like right here, It counts the number of aggregation from this h12 to this h30. Okay, you can see, it's marked right here. Okay, so it's actually showing you that there are actually 22 aggregation between this cycle, and in that very cycle you can actually see the small macro trend for that particular cycle from peak to peak, and below the pivot it's trough to trough. Like right here, we saw a cycle from L2 to L26. It's marked right here, and the number of aggregation were actually 36. Okay, then it actually also shows you the average number of cycles above and below the pivot too. Okay, so again, this can be useful to indicate fear. Okay, for example, if you see that below the pivot the average number of cycle is actually 40, that indicates that there is a more bearish trend, and above the pivot is just 30, so that indicates that there is not bullish trend. Same can be used for the mean wave and the waves. If all of the waves are, like major waves are actually, below the 50% band, and also the mean wave is way too much below the 50% band, that indicates fear for the downside. I hope that it's pretty much understood what I'm trying to show right here. Okay, these are really basic things that you need to understand about the fractals. Then only, you will be able to perfectly, use all of these for your personal analysis. Then comes the spread monster. For the spread monster, we already have a video on it, a dedicated video on it, and I've explained it way too many times. Okay, but for just a bonus, I've actually prepared a video that how you can actually use the spread monster for plotting out different levels. So what is spread monster? Spread monster all about levels and odds. For example, you see a cluster, like in the fractals, like wherever these black imprints, just come very close to each other and it forms a black area, that is a cluster. Okay, and inside of the spread monster too, there's a way to identify all of those clusters inside of the density chart. Okay, I hope that you have already watched the spread monster video that we made. This is a that is a dedicated video that I explain about the volatility graph, the density, and the odds graph. But in this video, you're gonna see that how you can actually, just use the spread monster to plot out different levels and even plot out the odds. So yeah, let's go on to that video. Hi, welcome back to another video. So in today's video, I'm going to be telling you that how you can actually use the spread monster to plot out different levels or even areas that the market can reverse from. The first one, we have the historical volatility projection graph or the volatility graph. And so on this one, we have four important levels. The first two are the medians, the yellow ones, which for which we have 90% odds that either of the medians are hit, and then we have the walls. There's only 25% probability to break those walls. Okay, so we have four of these important levels, and then we have the density graph. Now density graph is a bit difficult to understand that what's really going on in here. So basically wherever you see those curvatures, they represent important reversal levels, like above the previous day close. This is the previous day close for Tuesday, so today is Wednesday. So we see that all the curvatures above the previous day close are resistances and below are of course support. Now how you can actually use this to your benefit to actually plot out different levels? You can, just look at the cluster. Wherever you see the cluster of the waves, that represents a strong reversal area, like right here from 476.92 to 477.46. That is a cluster, so that means that it can work as an important resistance. Same is for below the previous day close. Now coming to the odds graph. With the odds graph, we have the frequencies. Okay, so with the frequencies, basically wherever the frequency goes flat, that marks as an important level. For example, here the frequency goes flat, that is an important resistance. You can just mark it on your chart and it will work. Of course it works, because you guys know that the chart I share is made from all of these charts. Okay, so I've been backtesting for the past 3 months now, and I've been finding it like great success with it. And there's one more thing that I've noticed, that is the cluster of all these probabilities. Like right here, you see these this cluster of the probabilities that is forming here, that marks as a POI. Similar thing right here. Okay, so wherever these numbers are getting cluttered, that means that it marks as a POI in the past 200 days of data, or whatever amount of days of data you are actually using. Okay, and you can just for today, you can actually just see my chart that I actually plotted on TOS. So basically what I did is that I used the spread monster. First of all, we have the volatility graph to plot out the medians and our balls, and then I use this sinusoidal graph or the spaghetti graph to actually plot out different clusters that you see right here marked with gray. Okay, now you must be wondering, what is this pink box? Basically, this is the pivot. Now there are two ways to plot out the pivots. I'm going to be talking about that very very soon. And then you must be seeing these lines. So these lines are actually derived from the odds graph, wherever I saw that okay, the frequency is going flat, that can work as a resistance or support. So that is how I used the three graphs. And there's just one more thing about this spread monster, that is the stat. Now stat, you can basically use that how much what is the probability for breaking a particular level. For example, the probability to break 476.97 is just 32%, and you can see the count for it. Okay, so this is how it works. And basically all of the charts that you have already seen on my trading view, and these are all plotted with the spread monster. Now with the spread monster, you have two options. First one is that you can actually plot out what I am doing, the historical data, or you have the implied volatility, basically IV. Begin talks about it all the time. And basically if I go to the density graph and click on the 19th March contract and click on show strikes, I have the IV. Now using the IV, we have already made a video. You can actually mark out the peak IV and then the IV balls. So basically they work as the same as like support and resistance levels. Basically peak is kind of like a pivot. If the market breaks it, there's a higher probability that we can see the IV ball. This is for either of the directions, above or below the IV peak. Okay, and then there's just one last thing about the pivot, that for its formation, basically using the spread monster, using the odds graph, we have the intersection. You see these two frequencies right here, that works as a pivot. That's all. So basically using the whole spread monster tool, you don't need to look at anything else in the fractals. You can just simply use the spread monster and plot out charts for yourself. Simple. And you saw that pink box, right? Now you must be wondering where that came from. So I use the dead zone for plotting out basically my pivot on my graph. And let me just load it. Okay, so here we have the graph loaded. Okay, wherever you see the yellow area, that is the dead zone. In that zone, the market makers make the most amount of money. And this is for the overnight, so this can work as a pivot. So there's a simple rule about the dead zone that we have been noticing. The overnight dead zone works as a pivot, and the intraday dead zone works as a magnet. Okay, so we have a simple pivot now. We all have all our levels, so basically it's all sorted out now. Okay, you also have the stats using the statistics inside of the spread monster. So here's how you can actually use the spread monster or the data to plot out your charts on your trading view or TOS. So yeah, have a good day now. I hope that the video actually made a lot of sense to you, that how you are supposed to use the spread monster for plotting out different levels, as well as finding out different dots for particular levels. Okay, now there's just one last thing that we need to talk about, that is the IV data that we have inside of the fractals. But right here, you see that the number of waves right here, the density graph, is not very populated. Now, this is pretty bad for plotting out your even IV. Why? Because there's not even data that the market can, like the fractals use to actually different levels. Like the market is currently at 3, like L3. And for a such a low number of like such a low number of wave, and where we see a lot of number of patients, this is pretty high number for the low. Okay, in the wave 1 or the lower wave number, we see a lot of transitions. So of course we cannot like expect L26 or H26 like that. Okay, like very small changes in the frequency actually just leads to a transition, just like that. Okay, so L3 is considered a pretty outlier move, and we are of course gonna see lower amount of L3s in this 200 days of data. So I'm gonna increase the number of days of data. Let's say I'm gonna increase it to 2000. Okay, so this is 2000 days of data right here loaded in front of you. Okay, now if I go to the spread monster now and click on the density chart, see, my data is all populated. Maybe I've used a little bit more number of number of days of data. So if I reduce it to, let's say, 1,000 sounds right, or even 500, it's gonna make sense. Okay, now if I go to the density chart here, you can see the data is again populated. If here, like in the count on the right hand side, if you see that the number of data is actually above 80, that means that you're using the right number of days to load. And that can give you the idea that, okay, so this is the time frame I can actually use to plot out my different levels. So for the IVs, we already have a video made by for the weekly and the daily IV. You can just check it out inside of the fractal in the RCG YouTube channel.